Good morning.
Our suggestion is that you find a way to have balanced digital settings.
Can you guys hear me? Thank you, Nick. I'll be back in a minute.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrency. This risk can be substantial, therefore investors should carefully consider potentially limited trading, past performance, and likelihood of future performance. The software, strategy, tactics, reference, and related websites, digital news, and for educational purposes only, should not be considered to be spread by prompts or guarantees that you will prompt losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment to all samples and trader, LLC, and any associated companies, agents, management, owners, and customers regardless of information. Please trade responsibly. Commodity futures trading commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations. Some of which are described herein. No representation is being made of any accountable exotic G products or losses similar to the show. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading recording completely accounts for the impact of financial risk in actual trading. For example, the ability to withstand losses or appears in a particular trading program in spite of trading losses on material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may not be overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the market's general or to the implementation of any specific trading program which cannot fully account for its simulated trading or in preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
All right, good morning. Brent's going to be joining us here in a few minutes. Completely dead. Feels like a Monday, and Monday in a holiday week. So bring your questions for Brent. Obviously, talk about every day how this hero is just running the show 98% of the time, it feels like. So bring your questions for him. I think I got to restart my Sierra chart, which is not good. So there, I guess there was a little sell ice here, and Nasdaq got into anything with it, but what was this guy over here? Combine these two. Well, it might not be on my screen. I don't know if I shared the screen here. Yeah, okay. So completely dead. Nothing across the board. This is the only event so far. Let me start this. Let's see if Brent's on here yet. Cannot see him. All right, so I mean, we did the usual bungee jump on Friday. Brent kind of called it. He said, you know, the puts were expensive and turned around and Hero ripped, I think, 8-9 billion and led to that move. So we're opening up 66. Yes. Opening here in the Sizzy zone. We're rejected on Friday. I mean, was it Friday? Yeah, a couple tails here. So again, I don't trade any of my areas without the stop iceberg event. So just waiting if we get one. Let's see if Brent is on here yet. There he is. All right, let me give him access here. You hear me, Brent?
Yeah, hey Scott, how you doing?
Good, how are you?
I'm doing great. Thank you.
I think I gave you access to the screen. If you
All
wanna-
right, let me see right here. Almost I can never remember.
Yeah, either can I, and I use this thing every day and I still don't know how to get access.
Am I showing the right? Yeah, you see my
There we go. Yeah,
All right, we're in.
awesome.
Thanks for having me, man. It's been too long, I will say. And thank you everybody, if everyone's on here watching. Thanks for joining me.
Yeah, it's this options flow is just, it's getting more and more prevalent, ridiculous. Like I just can't believe.
Intense, right?
Right. When I first, when we first got hooked up, I mean, I knew options flow was increasing in the marketplace, but I had no idea what it was going to turn into. I mean, it is, most days you're just a sitting duck, and then you sit there and watch the hero rip. You have a position on, and then the hero rips 8 billion the other way, and you just get run over, and it's just like, you can see why it's what's going on, which is obviously, that's a little bit of a relief, but I still am trying to figure out the best way to see this stuff coming in. I mean, I know we use the trace, and it gravitates toward the bigger strike prices as well, but it's insane how this thing is just running the show. It's unbelievable to me.
Yeah, well, the fact that you, a longtime professional futures trader, says this is obviously interesting to me. I'm biased because all I do is watch the options market, and you've also had a bunch of great, questions and things, things that you're asking for, looking for sources of this information and stuff, and can we predict when Hero's going to start to move a ton and those types of things, and the difficulty is, I would say, is that the rate or the pace of change is pretty wild. I mean, we were getting our arms around Gamma, and we had this like pretty clean way of looking at markets. And then all of a sudden over the last year, 2 years, 3 years, we had zero DT build up. And now on like a daily basis, it's like you mentioned, it's like out of nowhere, like on Thursday, you see $13 billion of selling pressure just on a Thursday at 10:30 or whatever. All of a sudden, all hell breaks loose.
Right.
And then on Friday, they just do the opposite, right? And then you just kind of sit here, feel like, again, you sit here like you're a sitting duck, but to your point, you can see, at least what the turbocharger is, right? Even if it's not the first catalyst, it's like, okay, now I know why it went so far so fast. I have a reason for that, which is somewhat comforting, but obviously you want to try to get in front of those moves is the holy grail.
Right. Yeah. So, I mean, what are these firms or whoever's playing these games? And, I talk about it all the time. So I used to be like, a king manipulator back in the day. Back then, spoofing was legal, and I would play games with the order book. That's what I would do all day. And I don't like it being done to me nowadays. But
yeah.
Like, what kind of money do these firms have to be able to buy, notionally $1 billion, $8 billion? Like, what do they have to have in their, reserves to be able to put on that kind of size? Like, what kind of actual money is being transacted there? Do you know? Like, what would be your guess?
The thing about it is, if you say, well, who is like the perpetrator, right, of this sort of size?
Mm-hmm.
When you look at the flow, it has a real algorithmic appearance. So like, what do I mean by that? So if you are familiar with, you put an order in TWAP, right, or VWAP. I don't know if everyone's familiar with those types of things, where like you put it into an algo and you say, okay, I want to buy 1 million shares of SPY from 10:30 to 11 o'clock, and then you have an algo that just goes in and buys whatever 1,000 shares every minute, or whatever the algo is, right? So you get a very linear look to the order flow. And so the reason I bring that up is important is because if you look at what happened on Thursday afternoon, right? So this is Thursday night's note. The purple line is the Hero order flow. So hopefully you can see this image, right? Like, look how linear that is, right? Meaning whatever was started here, they turn the algo on, and the algo keeps going until basically S&P hits this level, 6,600, right? Where the yellow arrow stops is 6,600. So an algo turns on, and that is, as we mentioned, that starts at 1 billion as the high of this purple line, and then it goes to a -8. So that's $9 billion delta notional of order flow. That looks like an algo just came down and turned this on and ran for at least whatever this is, an hour and a half, right? And if you go and look at the underlying data, it's like a one lot of S&P. It's like one lot, one lot, one lot, one lot. It's not, it's not one fund coming in and buying 100,000 contracts, obviously, because you just see one big drop in this line. Arguably, you would see this kind of linear, like approximation. So you start to go, okay, like banks, maybe a couple of the biggest hedge funds in the world. I mean, obviously, you could get some leverage in here, and then obviously market makers are the other side of this. The other tricky part with some of this order flow is that it is opened and then closed, so you don't really see it in end of day data, right? Because it's 0 DT data 9 times out of 10, which obviously cloaks a little bit who it is. And then the second one is there is this interaction of this order flow with these big levels. So we talked about the seek and destroy thing or the captain counter guy before, but you'll see these big 0 DTE strikes come in, and the market loves to move to those strikes. It's like it has to touch those levels, and once it touches those levels, it's like, okay, the algo turns off, whatever the algo is. So,
right.
That to me, that component to me says options market makers, because it seems to respond to these levels so often, right? Where you go, okay, this is the big strike. We know what the big strike is. You can see it sitting there, and you'll see the delta, the hero signal, which is the options deltas, move so violently to that level, and then they stop. It's like on Friday night, right? That's what happened. So if you look at the Friday night flow, the big algo in place, and this is a little more clouded here, excuse me. So the S&P is this candlestick line where the S&P, turned around at. We had these giant positions. So I can look at that and trace and just look at Friday's order flow. So if you just kind of like wind back how the market moved, like you could see these are the big strikes that come in, right? So this is 10:30 in the morning. Here's the big strike. And at 10:30 in the morning on Thursday is when the algo turned on, right? The day before. And then look what happens here at 10:30. The purple line starts to go up $1 billion. And it's like, what is going on here, right? Right here. See that?
Right.
Like, that's massive order flow at the same time. So it's like, is this a European related trade where, Europe closes around that time and then another desk picks up? Like, is there something related to that? But this is the giant algo, like this is the giant intraday strike. And so you just see the market get pumped into that level. And then where does it stop, right? Like 66.30. So you see these big positions come into the market, and then this hero flow pushes the market to that level, and then it shuts off, right? So it's like, well, why did that shut off? Why did that purple line stop going up as soon as we hit that level? Like, there has to be a relationship there in my mind, right? Because it happens on a daily basis that you see.
It's ridiculous. It's insane.
So it's sort of like, I don't know, I don't know what, then Trump, this was the Trump tweet, right? Or Trump said he may sell NVIDIA chips to China. So then you get this extra little boost in the afternoon, but this was the cap of the market, right? So you see this stuff every day, and you're like, well, if this is a hedge fund that is trading, say, S&P contracts versus NVIDIA or Tesla, which I believe a lot of flow is related to that, then the NVIDIA and Tesla correlation or dispersion trade wouldn't just shut off at these big strikes. That doesn't make any sense. So this stuff has to be some type of flow that's related to these strikes because of the fact that they react. And I think that is in a large part, so to me, it says market makers is what it was, the way that I sort of read this. Now, that being said, there is another type of trade. The other trade that is in the market in a serious way is the correlation or dispersion trade, it's commonly referred to as. And what that is that you could trade the S&P 500, so you trade SPX options versus Tesla and NVIDIA, and then sort of like this rolling cadre of other names. Like sometimes it's Palantir, sometimes it's another name. And the reason I can say that is this is top options volume just for today, but there's two tiers of options volumes, right? There's Spiders, Qs, S&P, obviously, those are the top names, and then Tesla and NVIDIA. Those ones will be 2 or 3 million contracts a day. You can set your watch to it. You can, just like the sun comes up, you know that those names will trade 2 million contracts or more. And then you have a giant gap down to where any other stock, like Apple trades 1 million contracts on a day, that's huge. For Apple, it's huge, right? If Palantir does 1 million contracts, that's huge. So there's this second tier volume, right, of place, which tells me again, who's trading NVIDIA and Tesla like that? It's not because people love NVIDIA stock or Tesla stock. It's because it's a very liquid options complex, and there's some type of high frequency trading, algorithmic trade. And that is like when you talk about like pod shops or quantitative trading shops, to me, that's a lot of like hedge fund type order flow that may be trading those in what's known as like a dispersion trade. And that is why if you look at, we talk about how big the 0DT volume is the S&P in the SPX is. So this is SPX volume. You can see it's sustained at 60+%, 55, 60%. So Friday was 60%. Late last week was 65. But look at the NASDAQ. NDX options volume in the NASDAQ, 75 to 80% can be 0DT for NDX options. And if you look at the Qs, that's 51% too, go up as high as 60%. So, the 0DT thing exists across all the major indices, right? IWM, obviously not quite as big in that 0DT space, but S&P, NASDAQ both have these massive volumes. So my very long-winded answer to you, Scott, is I think there's two flows. Number one is this, we call it the seek and destroy thing. It's like, where's this condor trade? And the volume moves to that condor trade or that big option spread, and then it shuts off. So to me, that screams market maker. because the correlation of the big trade and the flow is so consistent. And then the second one that I think that keeps these volumes high is NDX and Tesla. And sometimes you will go in and you will see when you look at Hero. So those of you who don't know Hero, what we're doing is we're looking at every single trade that takes place in the S&P 500 here. So SPX, SPY, et cetera. And we're saying how much market making flow is going to be tied to those orders. And we call that delta, right? And so in this case, so far this morning was minus 400 million of delta that is traded in the S&P. So that is, if it's a negative number, that's bearish order flow. And is that huge? 500 million after Monday open is not huge. On Friday, on Thursday, we set a record of 13 billion, 30-day record. And then I think the following Friday, the day after, we got 9.6 billion in terms of, huge numbers. So that's the individual stock order, that's the index order flow. But then you can look at the equity order flow, right? So the equities this morning, so this is Tesla, Nvidia, Apple, any name that's in the S&P 500 so far is putting up $250 million. Well, if people are buying $250 million worth of S&P equity stock, right? That's not a huge number right now, but imagine this goes to 2 billion. Well, then you start paying attention. Go, well, people are buying $2 billion worth of calls, right? In the S&P, that can move the market up. But a lot of that flow will just be Tesla, right? So in this case, if we look at Tesla, 169 million. So this number was 280 million, but how much of that is Tesla? I just told you, right? 160 million. And then how much of that is Nvidia, right? Nvidia is minus 170 million. So those two sort of offset. And then Google is the other name that is really, going off right now, 34 million. So if people are buying these underlying stocks, that flow will often almost be equivalent in size to what the S&P itself is doing. And you can almost sort of mentally start to pair that off a little bit, which I think is quite interesting. So there's a couple of sources that we're looking to, Scott, to your point of, can we start to understand what the conditions are, where we'll get, $2-3 billion worth of S&P order flow that's about to spark. So like, can we see the conditions are ready for that giant order flow to unleash? And we're definitely looking, closely at trying to figure that out. So if we just look at levels for today, and we look at 0 DTE, so I turned on 0 DTE only, there's this one big position up here at 6,700. And then so far, there's not a lot of positions here, right? Now, what time does that condor or spread trade usually come in? Around 10 a.m. So what does that mean? We'll still probably be talking at the time that trade comes in, but generally around 10 o'clock or so, we're going to see these bars jump in a major way. And that tells us that short dated, I keep calling it the condor position. Sometimes it's just a big put spread or big call spread, but you'll see that pop in here as a giant position. And then more often than not, the market tends to move to wherever that position is. So this map, for those of you who aren't aware of this map, we call this trace. This updates every 10 minutes. The bars over here update every 10 minutes. The white line is the S&P 500. And then this purple line is the hedging flow. So right now we got $1 billion of negative hedging flow in the S&P 500. So that's our hero signal. And so that is preventing the market from sort of rallying in a material way. Scott, you had this incredible insight where if we look at the hero order flow, right? Because normally you'd say, hey, Brent, is this a lot of order flow? How can we tell? I would say $1 billion over about 20 minutes is certainly a lot of order flow. So this is starting to be a decent amount of order flow. We just had OPEX on Friday, so you always want to give this a minute to digest. But the interesting thing that Scott brought up once, which has made me a bunch of money in certain trades, is if the order flow is kind of like pressuring the market down, you're going to be $1 billion, and the market's not really going lower, then you got to watch out, because if that options order flow turns and starts going bullish, that's where you can get some of the biggest rips you've ever seen, right? So right now we're watching this order flow
too, right? So it's like you get the flow alert, and then again, from your analysis, you say that it usually will turn the market. Well, a lot of times you get the flow alert and you see the flow go the other way, but the market just spins in place, and then so it does. Someone's absorbing that flow alert is how I view it, and then when it turns back the other way, when the hero turns back the other direction, then the market just rips in that direction, because it's like, it didn't react to the initial flow alert like it usually does. And I see that more when the market's going up than going down, right? So if we're moving higher and hero's moving higher and then the flow alert happens, well, you're expecting the market to reverse a little bit. Well, way more often when we're going up, you get the flow alert, the market doesn't, like the hero turns down, S&P just spins in place, and then when the hero turns back up, then the S&P rips off the page. So it's more that I've noticed. It's more when the market's moving higher. But
it's a very interesting observation. Related also to kind of what's happening now, right? The order flow is sort of negative, and to start the day, it's like, okay, we have to digest Monday and whatever news and blah, blah, blah. And the market's a little bit weak to start, right? But the order flow is threatening to turn higher. So like you can see here, which is the purple bars, bottomed out here at 900 million. It's starting to turn up. Now, there obviously can be a fair amount of noise in this. So you start to learn the trends. You also the other thing that we just added in here was a bunch of, you can add moving averages and things like that to the hero indicators, which I think are really helpful. But so I'll let's just talk about what's happening, at this moment, right? If you go through the checklist, we have a pretty quick checklist of flows. Like number one, what are the big levels on the board? This 6700, remember I said we would see a big order come in? Look at this, 930, 940, it just turned on. So there's a huge strike up here at 6700, okay? So this is 0DT only too, right? So that is a big strike. Let's just look at the net OI. So the condor trade that comes in, there's two parts of it. And what we're seeing right now is there's one part here at 6,700, and the other strikes are way down here, it looks like. 6,450 maybe. Seems almost like too far. So it's almost like they only traded the call side today. But that's the big strike. So I'm watching that, and then I see this order right down here, 6,550. And if you say, Brent, how do you know that if that's big or not? If you hover over it, you'll get a size. So with all the recent volatility in the market, we've not seen. What I love is the 99th percentile strike, which means that third line down there would be 99 plus. So 96 in this market actually turns out to be decent size because we've had so much volatility. This is the strike that I was just talking about. Like we were just talking about this literally 2 minutes ago, and now you see it come in. See, bam. So okay, here's this big level. If we look at hero, so if I want to get bullish right now, what do I want to see? This purple line start to go higher because that tells me that people are buying calls for SPX options. And then the other one you can watch is the S&P equity flow. So I mentioned both those before. So this is S&P index, so SPX, SPY, et cetera, is in this indicator. I'm going to change the indicator single stocks. So are people buying Tesla, Apple, Google, JP Morgan, whatever? That would mean this purple line go higher if they're buying calls in those stocks as an example. And that's not necessarily trending higher, but it's not bearish so far, right? And so why do I want to see those hero values go up? Because it tells me people are buying calls, and that means that market makers have to likely buy stock. And the goal here is to identify when we're going to get one of those big $2-3 billion trends in the hero signal like we're just showing you what happened on Friday. So number one is I have these targets. The big target is up here. There's not big positions to the downside at the moment that I can target. And then the second one is, okay, I have a target potentially at 6,700. Is the real-time flow backing the bullish, tailwind that I'm looking for? Are we seeing that? And so far, not, right? It hasn't started to come in yet. You can see this purple candlestick is the same chart, right? The same purple line that we're seeing in Trace. So, we're just taking a look at that, minus 600 million. It's not, it's just sort of digesting, I will say. And then the single stock still tends to be relatively, bullish, but, not exuberantly bullish. So we're waiting for this to digest. Obviously, it's a kind of a weak start here. But let's talk about another dynamic in the market that I think is like really critical to understand and interesting, and that's volatility, right? So we see VIX is at 22 to open the day. And if you're familiar with time decay at all, the way that this works is if you buy a put, Scott, and the VIX is at 30, what that is telling you is puts are pretty expensive, right? And what that means is that when puts are expensive, there has to be a lot of dealer hedging related to those puts, right? Expensive puts means I have to sell a lot of shares as a market maker to hedge that position. So you've all probably heard of time decay as a force in the market, right? So I've been making the case that I think this will be a bullish week in the markets because of this idea. So as volatility comes down, right? So this is 60% vol. So think of this as like the VIX at like, 50, and then 40% vol is the VIX at like 30, and then 20% vol is the VIX at like 20. And why does this matter? Because the higher volatility is, the more time decay there is. So when the VIX is really high like it is now, and people are buying puts in a major way like they are now, the decay of those puts is extreme. And so as those puts lose value, then market makers can buy stock back, and that puts a tailwind in the market. Hopefully I explained that okay.
Yeah.
So the background dynamic of whatever is happening here at the open, to me, faces up against this. Why does this also matter? Because the market's closed on Thursday for Thanksgiving, and we have to have a half day on Friday. So if you own put options right now, and the market is not really going down, and we just had a weekend, and the VIX is at 25, and it's starting to come down, and then like everyone just wants to go on, you know, eat their turkey and think about something else, like puts are burning right now, right? And the longer the market does nothing, the more that burn is going to kick in, and we call this Vanna, right? And Vanna is going to add this tailwind into the market, and that's a major driver. And I talked about this in this morning's note. This is a major driver of upside in stocks, right? So why does this matter? It's because you can make a list right now, Scott, of the 10 reasons why the market's weak, right? You go like, well, crypto's getting beat up, and AI trade is overdone, and rates, and like, you know, there's this list, right? But nothing is like, okay, this bank failed, for example, right? There's not this like concrete thing we can point to. It's all sort of just sentiment. And the reason I think that's important is because why are you going to wake up this morning and buy puts? Like, what is it in you that wants to buy puts when the VIX is at 25 and puts are already expensive? How can I say that? We call this compass, and this is call prices. So if call prices are expensive, you're on the right side of this chart. If put prices are expensive, you're on the left side of this chart. All the biggest names are on the left side of this chart. So do you want to buy something when it's expensive? Normally not, right? Now, if a bank fails, then these puts are going to go much higher in price. We obviously don't know that. But if you are just sort of sitting here thinking like, I'm a speculator, let me put a position on, you're buying puts at expensive prices. Generally, buying expensive stuff is not where you make money. So that's the other tailwinds. Like if you want to short Microsoft or IWM or MicroStrategy, well, guess what? Like that bus already left the kind of terminal. If MicroStrategy goes down now, for example, the Bitcoin name goes down because they have to liquidate their Bitcoin and Trump, whatever. Things can always get worse. Obviously, I'm just obviously stating that there's no guarantees here. But as a general rule of thumb, everybody's already bearish. So if everyone's already bearish and options are expensive, and we have this weekend coming up, long weekend coming up, like the decay of these options should add a tailwind to the market. And the reason I bring that up is because what I'm watching for here is the opportunity to sort of like, I kind of want to lean long. That's what I was talking in the note this morning. And now I have this upside target at 6,700, which is a clear target. Like anyone looking at support, you go like, what's the support and resistance level? Well, where are the big bars? They're obvious, right? You don't need to be a genius or be well studied in options flow to see where the big bar is. And then, so the only piece that has not yet clicked in yet is this hero order flow. And the hero order flow is just saying, hey, everyone's starting now to buy calls or sell puts, right? Because if you buy a call or sell a put, that's bullish order flow, and that makes this purple line go up. And so, you know, so that's how I kind of put these pieces together.
Have you noticed, or do you have any stats on, like, when the hero moves, you always talk it's $1 billion as your baseline, that notional, that's a good move, good size move. Do you have any stats, or have you noticed when it moves $1 billion, you know, how often does it just keep going up versus reversing, or not necessarily up, but how many times does it continue in that direction versus reversing? I mean, lately, if it moves $1 billion, then it's 2, then it's 4, then it's 8, then it's 10, right? Like, have you noticed, you know, how many times it actually will hit $1 billion one way and then turn around and go $1 billion other? That from lately, I haven't seen that happen very often.
It's a great point. I do not have stats on sort of the continuity of how long a hero sort of trend would last. It's a very interesting concept and idea, absolutely. We've done work with hero in terms of, so like the flow alert, for example, is built around understanding when the flow is material in terms of the underlying stock that you're watching. So we were talking about Google before, and if you see a flow alert, which is this, right? This is telling you that it's significant order flow related to the stock. And so we did studies around the hero signal here and said, this generally means mean reversion. So what does that mean? If you get a giant, and can you see that flow alert all right? No, it's a little bit light, but it's this line right here.
Yeah, I can see
for you. So this right here is hero flow alert, and you can turn on the key level as well. But what this basically said is mean reversion is what you want to look for. Right now, that triggers and the stock rallies into that. But the thing you need to be cognizant of is we don't know for sure when the order flow will stop, right? We just know that it's become big enough to pay attention to. So the trick here is, how do I know when someone's going to stop buying calls in Google? Like I don't. I can tell when it's become a significant, statistically significant amount of order flow. The second thing, so mean reversion before 11 a.m., that tends to be what happens off of these hero signals. Meaning, if the stock is ripping and you get a flow alert, the stock will tend to sort of mean revert in price after the hero alert went off. So you can see here, for example, hero rips, and then there's a small kind of mean reversion in the stock. But what happens after that? You get more flow alerts. Well, why is that? Because people are continuing to buy calls in this stock. And the reason I bring this up is because if you get a flow alert after 11, that tends to signal price trend. So a flow alert in the morning speaks to mean reversion, sort of like, and what is that? Well, market opens, retail comes in, everyone comes in, they shove their orders in the market. There's a bunch of news in some stock that's like a momentum stock. Stock tends to rip 2% or something, and then it will fade kind of by like 9:45. You know, that kind of setup. Whereas if the flow alerts are going off after 11 o'clock, what that's telling you is there's some kind of big player in the market that is just like buying calls throughout the day, and they're not likely to stop, right? What that's starting to tell you is the flow alert is setting up a day trend as opposed to more of like a rush off of some headline or something. So
And what time is that usually? You think it kind of flips to directional versus fade?
Yeah, so if I see a flow alert after 11 o'clock, I don't want to fade that. Now, if it's news driven, like at 12 o'clock news hits, some headline about Google just bought whatever, some little cap company, that little cap company's ripping, you know, that changes the dynamic. But let's just say there's no material news out there and you just see a flow alert go off at like 12 in the afternoon or 1 in the afternoon, that I do not want to short that stock, right? If it's a bullish flow alert. When I say it's a bullish flow alert, it just occurs when hero is positive, right? So that's the difference in the big stuff. In terms of the hero alert itself, for the S&P 500, for example, it has changed. The flow has changed so much over the last even just 6 months with this condor trade. So that was a trade we were just talking about, where it just comes into the market all of a sudden, and you can set your sort of watch to it, and the whole street knows this order's coming now. And how much flow is just 0DT. So we can look at the 0DT only flow, because this purple line, the purple candles is hero for all expirations, right? If I only want to see 0DT, I just turn that on here. So teal, right, is only 0DTE flow. Well, this is kind of interesting. What is 0DT doing? If these two lines, the candlestick and the purple, are perfectly overlaid as they are from the open till about 9:50, that tells you that all the flow is 0DTE, right? Then here's a little bit about divergence. What is the divergence? Divergence is telling me that someone is buying longer dated calls or longer dated puts. And that matters to me because 0DTE is here 1 minute, gone the next. They can put in $9-10 billion worth of order flow today, or even this hour, and then to your point earlier, just decide to stop and start, the trend can change there, right? But if people are buying longer dated calls or longer dated puts, which is the purple line, that's telling me that there are traders out there that are making a bet, not on today, but they're making a bet on tomorrow or the day after or whatever. And that is much more of a persistent signal to me, right? So what I would love to see to like think this is going to be a hugely bullish week is I want to see people buying longer dated calls, right? Selling puts in particular, that are not 0DT trades. And so, you know, that divergence is setting up a little bit here. And then I go through, well, what did I just talk about volatility? And we have this big target to the upside. So this setup rate, you know, to me, if we can get a turn positive in hero, like these lines can materially turn up, then I think we're going to get a pretty, you know, sharp move to the upside. That's what I see setting up. I don't want to be too quick and jump into that because the 0DT order flow hasn't turned up yet. It's still largely negative on the day, but you can see that divergence starting to set up, right? And so, you know, I think that's a pretty important signal. Last thing is, what is the most bullish thing you can see in the options market right now is put selling. Why? Because put selling tells us that, number one, you're closing out your hedges, which is important. But the second one is if you sell a put, that would be the obvious bullish trade you make here, because in the options market, that's what is kind of, that would be the most sensible trade if you wanted to get bullish, right? Close your puts out, either close the ones you owned or short them, right, as a signal to go up. And we're not, you know, we're not quite seeing that. Obviously, it's only 10 o'clock yet. The blue lines are 0DT put is the light blue. All expiration puts are dark blue. And so what is the flow right now? People are buying slightly longer dated calls. That's why the orange line is kind of going up. And this is all explained. I know there's a lot to digest if you're new to this. We have all these tutorials and everything else on Spotgamma, so we walk you through all this sort of stuff. But at the end of the day, if you know purple and green are going up, that's bullish order flow coming into the market. That's the options market being bullish, right? That's kind of all you need to know from the kind of phase one. So again,
so do you have any notional values like in the SPX where you say, okay, it's like a filter, like, okay, if we're over 5 billion notional, I don't want to be short anything. Like, I mean, I know it does turn around occasionally, but is there any like set amount that you think that you would like not fade? You know, you would not want to be on the other side of the hero, you know, so plus 2 billion, plus 5 billion. Like, and when it gets up to ridiculous amounts, like, how do you read that? Do you say, okay, this is 12 billion, it's not going to go much higher, I think we're going to reverse here? Like, that's where I'm like trying to understand the best way to, you know, stay out of short trades if we're notionally something, or hey, it can't go any further up, I want to be short. Like, how do you view that, or do you have like filters like that when you trade?
Yeah, so we need at least $1 billion of order flow in like 15 minutes to be significant. So right now, what I'm looking for as I see this trend set up is I already have, for a bunch of reasons, I came into the market thinking that we could have a pretty bullish trend, right? So that is important. And then is there a major level? Right, so the fact that this map is all red tells me it's negative gamma. What does that mean? There's no support or resistance, and the market is free to move about until we have a major level, which is all the way up here. So we're not getting the major bullish order flow, which is $1 billion, right, over about 15 minutes to tell me that there's enough fuel to drive the market. And it's about the rate of change. So in this case, we're at negative 1 billion, and now we're at 200 million, right? So we're starting to get to that where, okay, $1 billion worth of order flow is something that is significant enough to start to drive the market. So that is, when I look at that, I go, okay, this is starting to be something significant, but until we kind of cross that $1 billion threshold, it's more just, you know, a little bit of noise as opposed to something significant that you can kind of, you know, sink your teeth into, right? So that is sort of the significant minimum threshold. Now, when you start to get into $3, $4, $5 billion worth of order flow, that's where you start to say, hey, the thing that is controlling this market, if we get hero values of over $3 or $4 billion, that's where I start to go, the options market is actually really in control of this thing, almost regardless of what else is going on. Does that make sense? So that's sort of the threshold of significant. And $10 billion is where you start to hit record hero values. Like that's about as big as it can get. So, you know, that's where, you know, it's like, okay, this is really swinging stuff. And the reason that is sometimes important to me, Scott, is because you obviously don't know when the flow is necessarily going to come in, right? But if you start to see these massive values, then you start to go, okay, I know what's going on here, right? And then I can play the second order move of that. In other words, I can fade a move or, you know, adjust because I know the options market was such a big driver. And I'll tell you this also, if the options flow is $10 billion and 99% of that was zero DT flow, you know, if that was driving the market lower, I'm much more apt to want to buy that dip or play a rally for tomorrow because I believe zero DT just drives the market too low, right? Like it exacerbates the volatility. So like I love fading zero DT volatility like on the next day. Why? Because if you're a zero DT trader, you don't care which way the market goes tomorrow. Like you only care about today. So, you know, that's sort of the dynamic. So to summarize that again, if it's less than $1 billion over about 15 minutes or so, then I don't care, right? I'm not going to pay attention to it. If he's talking about $3, $4 billion, then I'm like, okay, the options market here is really a significant driver for what's happening in the market. So you can see this really setting up now, right? We know what the target is. You can see that hero order flow really getting big, right? So right now it's like, what was my thesis? We needed big hero values. We have the volatility collapse thing. We have the big target. This is now starting to be the setup we were looking for, right? And you start to go, okay, well, there's another 25 handles up to this target. If you're not watching the options order flow, what other belief do you have? I'm not saying there isn't one. I'm just saying that you can't put these pieces together where there's data suggesting that we could get this strong of a rally, right? But now the hero order flow, you can see it. We went from about here, right, zero-ish to about 1.5, 2 billion. So it's starting to build up. been starting to be pretty significant. And when would I expect that order flow to turn, Scott? Is when we hit these big levels, right? Because that tends to be what turns the order flow off. It's like you hit the big condor strike or the big spread, which is here. So I would expect the hero value to keep charging. And let's just say you don't believe this. Well, let me wait for S&P to hit this level, and then I'll see if the purple line, which is hero, stops going up. Then I know I have a pretty good short here, right? Why? Because I hit the resistance level, the options order flow turned off, and I know the driver was that options order flow. So if the options order flow shut off, then I can actually get a pretty good short in there because I've seen the order flow drive the market. I've seen us hit the resistance point, and then I'm happy to fade that because I have these data points that say, look, options order flow drove us there. We stop at the giant options order flow level. The options order flow is shut off. Then that price action in the S&P should also fade as well, right? So
what do you do? So I've noticed like when it comes to these strikes, right, especially like midday, how do you view it when those start coming off? Is that like room for it to continue higher, or is that room for it to reverse versus
I think,
if it just stays on? You know what I'm saying?
yeah, I think that those are, so you bring up a good point about staying on, right? And in this case, like this is Thursday's price action. So you see this giant move, right? And you get into that level, 66.30. So that is the level. And then you're saying, okay, I believe that the market should stop at this strike because this is just what happens on a daily basis, right?
Right.
So this is the short that I'll be interested in fading. Now you're fading $2 billion worth of order flow. So that to me is the short. In this case, I would take the short, right? And then I would say, you know, does the market come off here? How negative does the order flow get, et cetera? And then once I have that short, because the order flow is stopping, I think I have the right direction. Now, how many points do you want to try to achieve if you short at that signal? To me, that's based on, number one, do the positions stick? Because occasionally you'll see those positions close. In other words, if we go through the day and suddenly they close this position, then I'm worried that that's not going to be resistance anymore, right? So that's one thing I check. The other one, to your point, is does hero continue to go lower or not? And as you can see here, it takes a while for it to turn around. So for your trading rules, you guys will set up thresholds, right? For, you know, if I put on a short and this is the setup, this is how much pain I'm willing to take or risk I'm willing to put on, risk reward, et cetera. But what I'll generally do is I'll put the short on, and then as long as the order flow in S&P doesn't break my target, and if hero turns over, then I'll ride a short down until a level that I think is material to the downside. You know, with hindsight, it's easy to say 6,600 here. Maybe you have an ATR stop loss or whatever it is, right? You have a lot of risk measurement techniques that I think are great to use in that situation. But mine are, does the S&P break the resistance level that I set up based on the options flow? And if this purple line was to continue just doing this, I don't want to be short anymore, right? I don't want to be short if the trend in that hero continues higher. And in this case, you can see, you know, we stuck at that level pretty well. So this is where I think combining your trading techniques and your stop loss parameters and, you know, how much you're looking to make on a trade given a bunch of different parameters really can help. Because the options market can give you the resistance level and give you the signal that the order flow is really starting to shut off or trend off. So that can be your reason to short, and then you can add in, you know, some of the other parameters that you're looking for in terms of, you know, how much do I hope to achieve in this loss, right, or in this setup.
Right.
So that's kind of, and I know that answer is probably not the way you're looking for. I'd be like, I'm going to short at this level and try to get whatever 50 bips. It's not always clear, you know, how much the market may mean revert. Like, do you go for 25 bips or shorter, easier trade? I would say that's obviously easier in that situation, the smaller scalp. You know, what's going on? Is there news that's supposed to come out later today? That we've been trending down over the course of the last, you know, is this an average day or is it a super negative volatile day? Because if it's a super volatile situation, then maybe I'll play for 50 bips or 0.5% or 1%. Whereas if it's just like a normal Monday, like, are you going to get a % move? Probably not, you know. So there's other, I think, parameters that sort of set up into that.
So what are some of you were saying moving averages you put on the hero with the new hero? Like, what do you put on there?
Hero's pretty cool to do this on. So what you could do in here is, so what I do in this case is if you go in here and you put in S&P 500, then you could go to total all. So that's the hero signal. So So what's being measured here is the actual hero signal itself, right? And then you can come in here, and I like putting in, sorry, not that one. So I come in here and then I put in the EMA. So there's an EMA cross strategy. This is the trading view strategy. And I've been playing with the time parameters on here. So this is 9 minutes and 26 minutes. You can change it a little bit. But the goal was like, can I find a change in hero trend? Is there an easy way to the point of when do I think the order flow is going to shut off? And so one of the things I've been experimenting with is if I put on the hero EMA in here, and this is on a rolling one day basis, when do I know, or when can I believe that the hero order flow has significantly shifted to the point either is like, do I know that the bullish flow is off or is it still on or whatever? Well, the EMA cross, if you put it on hero itself, so this candlestick line is now the hero signal itself, and this is the 10-minute moving average versus the 30-minute moving average, and the little dots, obviously, you can see here. We're basically watching for a cross of these two lines as this sort of permanent signal that, hey, the order flow has now gone from a bullish trend to a bearish trend, and that may make it easier for me to more sort of objectively determine that the bullish trend is over in terms of the options order flow. Does that make sense?
Yeah.
So I've liked this, and I haven't yet, because this is brand new. We just launched this about 2 weeks ago now, 3 weeks ago now. So what time frame are you looking at? You know, we're still playing with this a little bit, but I like this because a lot of times you're objectively trying to say, you know, did this flow really switch, or is it a short-term, you know, noise in there? And I'll put on the moving average, and then I'll go, okay, I'm not gonna say there's a change in order flow trend for hero itself. That's what this is, candlestick is now, until the 30-minute, you know, is crossed by the 10-minute.
Right.
And then I'll know that that bullish trend is off, right? Does that make sense?
Yeah, and that's what you've been using, the 10 and 30?
I've been using 10 and 30. It also depends on what, you know, obviously what's your day frame, right? Are you trying to scalp something intraday? You know, what's going on? Like today, I continue to think there's a bullish setup in here. So, you know, that 10-30 makes sense. If you're looking for that early signal of like a short-term, you know, almost like a day trade scalp in some fast-moving name, then I would go like a 5-minute, 20-minute, like in, you know, if you're trading some name that is like, you know, super momentum or whatever, day trade kind of thing, scalp, then I'll shorten that cross up a little bit. But you can do a bunch of other cool indicators on here as well, you know, volume, different volume indicator, all sorts of technical analysis on the hero indicator itself, which again, just speaks to this idea of like, can I identify the big trend? And, you know, so far it's a little chippy in terms of the huge trend, but using this moving average, you can just see like, all right, you know, we've digested, but the trend still seems higher at the moment.
Right. Yeah, it was just amazing to me. I mean, you watch you can literally overlay the hero with the market movement. I mean, it does exactly. I mean, even not notional moves, it does, you know, every blip.
Yeah.
So do you foresee any kind of regulations coming in? Because there's got to be, I mean, trading firms have to be complaining about the 0 date to expiration, you know, exploding and the games that are being played with it. Do you think they can ever even do anything about it as far as like, you know, I don't even know how they would regulate it, but I mean, there's got to be firms complaining about this. I mean, traders are, I mean, I bitch about it every day. Like, again, it's great to see, you know, why I'm getting run over, but it's just like, you're just a sitting duck. If they decide they're just going to load up, I mean, granted, I guess that goes for anything market related, but it just seems so easy to do with loading up these dealers and having them, because again, you know, you're going to get their reaction because they're not directional traders. So, you know, if you load them up, they're going to be buying the futures or selling the futures, you know, the opposing way. It's just, it's amazing to me how this is running the show, you know, 95% of the time.
I'm biased, but I obviously agree with your sort of statements there. And here's the thing with it, right? 70% of the NASDAQ volume 0 DTE, 60%, you know, is S&P 500. That's spiders and Qs. If you look at options volume kind of outside of the 0 DTE, it's actually not that big. And I would hesitate to say there's actually been material growth there. I mean, there's been growth, but it's, you know, 0 DTE is huge, right? And then there's all these there's all these day trading platforms where you as a retail trader can automate 0 DTE strategies and things like that. So it is a giant moneymaker for exchanges. period. It is a massive amount of order flow, and I think the market makers, they know what's going on. Like, you think Ken Griffin's losing money on 0DT, like head of Citadel? Like, no, right?
Right.
So
Right.
I think that it is such a moneymaker, and the order flow is also so persistent that the only threat of there being some type of regulation is there has to be 0DT has to break something, right? And if
Which
it
is
hasn't
dumb.
broken anything, it's always possible.
Right.
It's always possible, but if we didn't break anything in April when the market was like the whole global financial system like seemed like it was about to seize up, like I'm not going to hold my breath waiting for it to break, something in terms of like a flash crash. But then the other situation is like it's all been operating fairly cleanly from the regulatory perspective, right? Like the stuff settles, it's a lot of his cash settles, go away. And then what's the other dynamic here? What are they trying to do? They're trying to add 0DT for single stocks. That's what they're pushing. So like daily listed Tesla, daily listed NVIDIA, et cetera, et cetera. So if anything, it almost seems to be going more this way.
Right.
I just think so much money. And what trading platforms like Thinkorswim and Interactive, all these, they love this, right? Why wouldn't they? Because that's what everyone's trading. So
Right.
I think it's hard to take that. You're going to take the punch bowl away. I think it would just be like a shot to the inner workings of the market. So again, I'm biased. I'm grateful that it's here because these analytics I think help so much. So I'm a beneficiary of 0DT just in terms of running Spotgamma, obviously. But
Right.
Sometimes as a business owner too, you look around and go like, what's my risk here? And you go through the risk like, well, if 0DT goes away, then who's going to want to stare at Trace or Hero? Kind of nobody. But what do you see if you just go Google what's happening? Increasing volumes, increasing focus on the space, more traders, more products they want to launch. So,
Oh yeah, for the exchanges.
maybe
I mean,
prediction markets take it all over one day or something like that. But for the time being, like, the time being, it seems like it's here to stay, and these trends continue to set up. And so, maybe it's something like this guy who keeps putting this condor trade and blows up. He hasn't blown up yet, and then that flow goes away. So that, that means that for a little while the flow changes, right? The way that the order flow impacts the market changes, for example.
Right.
But everything is very persistent at the moment. So
could you see those questions in the go-to meeting? There's a couple questions in there directed to you, I'm assuming. I don't know if you could see them or not. I could try to read them. Just kind of. What if the level breaks up? Does it become support? You mean the gamma levels?
I think what he's meaning about is this levels. Like if we hit this level. So there's one easy way that I watch that, right, is number one, how big is that level? So right now you see it's a 98th percentile, 99th percentile. So this is now a big level, right, for the S&P 500. We're still well below that level. S&P right now is 66, 68. So what would make me think that we would not keep this as a resistance level would be if this hero order flow turns, right? And so to the point of Thursday, for example, my expectation is that we hit a level and then stop. Like that's what I think. In other words, pin this would be my default. The thing that would make me stop thinking that we would pin it is if that purple line continues to go higher. Now, sometimes what you'll see is the market will mean revert and kind of pin at one of these strikes, for example. But the reason I'm pausing is because there's different trading environments. So like there's a normal quote unquote trading environment where like we were in like 2 months ago where the daily range of the S&P was like, 25 basis points, 0.5% to 0.25%, right? 25 to 50 bips a day. Then you could sort of say, we're probably going to pin this thing. This is not a market to me where I'm like, hey, we're going to pin a level, right? It's kind of it's obviously a lot trickier than a lot of respects. But what I would say is, just to answer your question more directly, is if this hero purple line stays stable, so like a lot of times what you'll see is the hero signal will plane. So just I can't draw. Can I draw? Can't draw. So a lot of times what you see is hero will go up, and then hero, I'm talking about the purple line, will just do that, right? You'll see, in other words, you'll see the order shut off, and then that's my signal. We're probably just going to waffle around that area. And in a normal market environment, quote unquote normal, like let's say the VIX, like VIX is at like 15, then I'll be like, okay, pinning this makes a ton of sense. If I was expecting that, or I shorted this level, or playing for a pin in the options market, but that purple line continues to do one of these, then I start to say, okay, we're probably going to advance through this level. And then you say, would that be support? Yes. So like if the market rallies and then we roll back over, that's the thing, that I would be watching for there.
And what if that comes off though, is what I'm saying. That was my question. So if it
Oh,
comes
if that
off,
comes off, then the idea that this is a significant level goes away, right? And then you say, well, which direction do you start to look for in terms of what the market is doing? Normally what you'll see is if this order goes away all of a sudden, then you're gonna see Hero do one of these, right? It'll spike up or spike down because whatever hedging flows related to this trade has to adjust. Does that make sense?
yeah,
So you
because
see
that
Hero
is the
jump
hero
up or
flow,
down.
right? If they start taking that off, that is controlling the flow that you're watching on the line, right?
Exactly. And so a lot of times you'll see like Hero spike and then do one of these, right? And so the market will kind of have like a weird move. So a lot of times you're like, why did the market just jump? And Hero had a big jump, and then you see like, oh, this, because Hero is real time, whereas this is every 10 minutes. So you'll see it kind of like update after the fact a little bit, and you go, oh, okay.
Yeah, why is there a delay on that? Is there a
So
reason
this
for that?
data is sourced from the SIBO options exchange, and they update the data every 10 minutes. We cannot get it any faster, and that's that. Now Hero comes from what's called an Oprah feed, which is every single trade that takes place in real time. We get that data and we model it and spit that out as fast as we can. So we're a bit limited by the data that is available, and so that is that. And if we could ever increase or make the data faster or whatever it is, then we're doing it, but we're sort of limited by that at the moment. But these positions tend to not disappear, right? They tend to stay until the close. So that is the thing to watch. And again, what am I looking for here? I think the S&P, and I've been saying this now since we started at least, right? I think like this is the target. If we hit this target, if we get lucky enough to hit that target, I don't have a reason to be long anymore. That's how I'm looking at this, right? And then would I be looking for a short setup? If we get there, yes. And so if this is the line, right? And then so I say, okay, if we get into this level, what am I going to be looking for if I want to short this thing? Does Hero, so green is now my projected Hero line, does Hero do one of these and fade? If it does, then I love shorting it. If Hero just sort of trends sideways, then maybe I short it and only try to get like 10 handles, or I do a smaller trade. But if Hero does this, right, and drops down $1 billion, then I'm happy staying short as long as Hero goes lower, right, trends lower. But what if we hit this level and then Hero goes like this? Well, like I'm going to close my short probably, because I don't want to be short if we get, let's say, plus $1 billion. Sorry, it's $1 billion. If we go $1 billion from when we hit 6,700 and Hero goes from like, let's say 2 billion to 3 billion, like I don't want to be short if Hero keeps going up. Does that make sense?
Yeah. So the other thing, the question I have is, say we're down here like we are right now, and it hasn't got to those strikes yet. And I noticed this, if those, what's your read if those strikes come off like now? Does that mean, obviously we're not going to head up there and maybe looking for a move lower? Like, how do you read that? Because I've seen that occasionally.
100%, yeah. I lose that target, right? So like I have a couple of reasons for thinking the market goes up. One is obviously, as I mentioned, like vol going down, VIX going lower is a tailwind for market. So I was like one of my core, like the core way that I came into the market to think about this. And then the second one is like I have this target at 6,700. That's the intraday target. And as long as Hero remains intact, like I like that. Now your point is if this goes away and this doesn't exist anymore, like, well, then what are my other reasons to think that the market may or may not go up? In this case, we have a strong move for market flow, but if Hero's still trending up, then why do I want to fade this thing, right? Like I don't have a good reason to want to fade the market if the options order flow is still going in that direction, right? So that's the kind of idea. Now, if this closes, you're going to see Hero move, right? That's going to change. I would 100% expect that, because this is a big trade. So if that trade is closed, the Hero value would move because it knows trades, or it senses those trades just get closed or changed. So that is a key thing to consider there. And then what would, like right now, what would make you say, Brent, you're clearly wrong here? What are the dynamics to the downside? Let's just say I'm wrong about the market going up. Well, like number one, here's the problem with, or here's what I see to the downside, right? This is trending higher, so great. I have this target, great. But let's just say, Brent, you're done. Your view about the tailwind of volatility and Hero going up is just wrong. what if Hero, the purple line starts going like this? Where do I think there could be a short, or like where would I take my short off? I mean, 6,600 is obvious because it's the round number and you would think the market would react to that. But if you just sort of say like, let's look at the opposite side of the coin. If Hero starts to roll over, I don't want to be long anymore, right? If this starts to go down $1 billion, let's say, so we go from like 1.7 billion where we are now to like, let's say 1 or less, then I'm like, okay, the trend is clearly over. And then, you know, what is the downside damage that can be done? There's no material strikes down here, which to me just says there's no obvious support. So, you know, this is kind of one of those things where you just go like, all right, that could get really pretty ugly, right? If that order flow turns around, for example. The other thing is that normally what you'll have in Hero is you'll have areas of this map that are red and blue, right? So blue tells us there's a support zone. There's no support in this market. There's also no resistance in this market. So what do I mean by that? Normally you would see a big pocket of blue, right? Like this, or you'd see down here would be a big area of blue, for example. But we don't have that today because we don't have that today because of the way the market is setting up. So let me show you like a historical chart, right? So we just go back, let's say last Monday, for example, here, right? This is just last Monday. I picked a random day. You can see there's this big area of support here, right? This big blue area. That's a big support area. So if I was short the market and we were coming into this blue zone, I would say, okay, I'm anticipating the market bounces in this area because there's all these blue strikes here. And if Hero bounces at the same price level, 6,600 area, then I don't want to be short anymore. Does that make sense?
Yeah.
Just like to the upside, if we ripped, I mean, that's a substantial move up, but let's just say the market just went hog wild to 6,900 and there's this big blue zone on the map. Well, then that's a big resistance area. I would expect Hero to stop going up and then I would close my long or maybe short in that zone. So the weird thing about today's dynamic is we just had options expiration. And so, you know, that is one of the reasons here, but there's no, we call that positive gamma, right? There's no positive gamma on this map at all. So my base case is we're set for a lot of movement, right? And if Hero keeps going up, then I guess I just got to stay long. And in this case, I have the target. If this target is gone, then I'm going long just because Hero's going long. And I think, you know, volatility, VIX is coming lower. So I'm still like, all right, that's okay. But, you know, it's not like the quote unquote 5-star setup because I don't have that clear single strike. The other one would be like, let's just say that this strike wasn't here, but this map just had a big blue zone like this right here. Like, okay, then I have a target, right? I have a clear target. And the target is based on, if you get into the fundamentals underlying is, the hedging flows are leading to that area, right? That's what that underlying sort of dynamics are that make me want to pay attention to those zones.
So why would there not be blue now with that blue strike? Just because the red, the negative?
It's offset, yeah. This position, the spread, yeah. So the spread is someone sold these calls, right, and they bought these. So the market maker has the opposites. The market maker owns these calls and is short these other ones. That makes sense. So yeah. This is showing you the opposite of hedge fund flow. So a hedge fund shorted these strikes to 6,700s and they bought these. It's called a call spread. So they hope to collect something like $1.50, right? And if the market closes below this level, they make $1.50 per contract. The market maker has the other side of that. So they make $1.50 if the market goes through this level. Does that make sense? Yeah. Or they make $3.50. So I can do that math real quick for you. So we look at what the actual positions underlying this is. So if we go to net OI, okay, so here are the positions right here. Oh, sorry, I keep zooming in and zooming out. So there are 4,800 calls there, right? The market maker owns 4,800. So they can only own them if they sold them, right? If they sold them to somebody, right?
Right.
So like Scott, you had to sell them. I had to buy them from you as the market maker. And right. Then if you look up 5 handles, you see 6705. There's 14,000 calls there. So this is the big, you know, net position here.
So while you're on that, just quickly for the, I don't mean to throw you off here, but like, so on the tape, what's the best filter? Is it the premium? Is it the actual, like, in your opinion? I know you don't use this a ton as far as your trading, but like, what's more important, premium or the actual? If you can scroll down there a little bit, or strike, or not strike. volume or premium? Like what's more important?
It depends on what you are looking for. So premium can be misleading because the biggest premium trades would come from orders that are really deep in the money, right? So like, let's say that I had a S&P call that I bought 6 months ago and I'm selling it today. It's just a deep in the money shares, right? And so like if I sell that, that's going to be massive premium, but maybe not all that important to the way the market is moving today, right? So the premium is skewed by kind of the value of the order. So what is more important is arguably the gammas. Like what are the biggest gamma positions on the day? And so if you sort by that, you'll see there's a lot of short dated positions in here, right? For the spiders, for example, and the Qs. It's like that's telling you the stuff that is more likely to be driving the price action for today. Does that make sense?
Yeah. So if you were to like, just off the top of your head, if you're going to put a filter for gamma that is something worthwhile watching that may flip the market or continue, what would you put in there? Would it be 1 billion or would it be 500 million?
You could put
That's
in
per order though. It's per order though,
this
right?
this is per order. So what I would do, like just to answer your question, there's two things you want to pay attention to. SPX, anything with, let me think. I'm trying to think about the right way to phrase this. So let's just look at SPX order flow. So the way the open interest, right, is only going to show up as open interest if we came into the day with that with open interest, right? Because open interest is only updated by the exchanges once a day at around midnight. So you have to go off the total volume. Usually what happens is the orders are one lots. See this? One lot, one lot, one lot, one lot, one lot. These are all individual one lot trades. See that?
Right.
So you can't look at this and be like, oh, that's a significant trade because they're just one lots. So you don't have a way of knowing necessarily what's happening. Now, any order in the SPX that is 5,000 contracts or more is a big trade. So 10,000, 20,000 is about as big the orders get. We always talk about the JP Morgan collar trade, that's 40,000 contracts. So, that's where the size gets really material. But as one lots, it's hard to see and it's hard to tell. So if you go to the contract data tab and you just sort that by total volume, you'll get a rolling update of where the biggest volumes are based on the strikes, right? So now you know where the big action is. Does that make sense?
Yeah.
So you watch this and then you can back into what is actually trading there, then that makes the most sense. The order flow that the market's going to be most reactive to, if you want to watch a scrolling thing, is generally going to be today's expiration, right? And then you can't set a volume trigger because they're almost always one lots, which makes it hard. So if you want to filter for today's expiration, that's going to reduce that order flow down a lot. But ultimately, you really need to see what in aggregate is carrying the biggest size, right? Because that's going to be maybe the more interesting dynamic. Now, volume is significant, but if I'm buying a bunch of calls that are 2, 3, 4% away from where the market's trading right now and they expire today, that doesn't actually necessarily mean anything to the market. And what's interesting about Gamma is highest for at the money options, right? And Gamma grows as you move to expiration. So what does that mean? Gamma like weights the volume for you, right? Gamma is telling you these are the options that the market is most sensitive to, which is why I'm watching Gamma as a proxy for what matters. And that Gamma notional is also what Trace is built off, right? Like if you hover over this, what do you see? You see Gamma. GEX stands for Gamma by strike is what that GEX stands for.
And that's what Hero is as well.
Hero is actually based off of Delta. So why does Delta matter? Delta is the number of shares required to hedge an options position. Okay, so if I have to buy 100 shares of stock to hedge an option order that just came in as a market maker, that's my Delta. Now, as the stock goes up or the stock goes down, I have to adjust that 100 shares, right? That's what Gamma is. Gamma tells us how we have to adjust that Delta ratio. Does that make sense?
Yeah.
So like Gamma matters because it's telling us how much adjustments has to be made once the order is on. Hero tells us how much initial trades have to be done when the order is placed. Does that make sense?
Yeah.
Okay, cool.
Yeah, so this is,
Now you see the size here, right? 99th percentile. Why? Because the Gamma is getting bigger at this strike as we move up.
Right. Well, the thing is too, so what I use is, obviously you've seen it before, the stop iceberg indicators. So it's like using, that's the CME enhanced data that shows us when these big firms are putting on, their hidden orders, because they can't just throw the orders in the order book or the market run, these always run away from it. So
Yeah.
for example, you can't see my screen right now, but there was some buy ice that came in right around 10 o'clock. Right. So it's like you can use that. So, you have your thesis that we go over every day in my trade room too. So you come up with a thesis of, okay, yeah, we're going to 6,700. Well, what could be a catalyst to start going up there? Oh, here comes some buy ice, right? And then we have rules around if it can push the ATR out of there, then it's a bullish event. So the point is like having your information, which is, again, increasingly the most important that I've ever seen, right? And then you combine it with these icebergs and you see the big money's buying too. And it's like, okay, it's go time. Now we're heading up there type of thing, right? Or every pullback, knowing these GEX levels that they have the tendency to gravitate, you're just waiting for pullbacks, and every time it pulls back, you can add to your position, something like that. But using them in tandem to come up with a real edge, right? And I again, between the stop iceberg indicator and the option stuff, I don't know of a better edge in futures.
Yeah, well, I love hearing you say that, and I would just say like my experience with people like yourself that come in as a professional trader or someone that is a seasoned trader that has a strategy, like I am not here to replace your strategy, right? I'm here to add to it. And I think when people combine what they're doing already with success, and then you filter that with what you're seeing in the options market, it gets to be very powerful. Like, because you go, okay, like this is what I believe off of my current data, and then it overlays or lines up with what the options data is saying, like, great, like then I just have extra confidence in what is happening. Like, and sometimes too, like you say there's an iceberg. Well, why is there an iceberg? I don't know. Like, is there news I don't know? Like, is something happening? Oh, it's because an options order just traded. Great, now I know what's going on, as opposed to like, I don't know, I go to some Discord room or on FinTwit and try to like find some narrative to figure out why the market just did what it did. It's like, oh, I know what it did. It was $9 billion 0 DT. Like, I can buy that dip because I don't have to worry about like not knowing that Oracle credit default swaps just like did something that is way above my pay grade, for example. So,
right.
The options market as a tool to explain what's happening, and it's just data, right? So you can say, okay, like the market went down at the time someone placed a 50,000 lot S&P order. Okay, now I know what happened, and now I can trade that differently than if I didn't know what was going on.
Right. Well, that's what I say in all my webinars, especially public ones. It's like telling traders, like, if you don't have this information, first of all, if you're profitable, it's pretty much, I take it as you're getting pretty lucky if you don't have this information. Like, you just got to know what's going on with this hero flow and these GEX levels. It's just because it's such a increasingly important, it's just running the show. It's amazing to me. Again, I've been trading 25 years, and I just cannot believe the impact it has. And if you don't have that information, like, you're trading in the dark as far as I'm concerned.
Yeah, I really believe that. And we write a note every morning that talk about the dynamics of the market. There are certain times when the options market is flashing just like a giant risk signal, for example, and no one else sees the risk signal unless you're watching the options market. October 10th was an example where now the options market's getting so big, it itself is a source of risk. And if you're not watching that and you don't know that, then suddenly you get caught off guard when something like October 10th happens, and you're like, what in God's name just happened? Because Trump tweeted something, the market went down like 3% in like 10 minutes or whatever it was.
Right.
It's like, well, if you knew that the options market was like stretched beyond belief, then you're not going to be so shocked about what just occurred, right? So, there are those like situations now where it's like the mess can just be made by positioning being so offsides. It's not always a reaction to the news or something. It's like, hey, the options market is just crazy. And why is it crazy? Because everyone and their brothers buying calls in these, AI names, for example, and that breaks things. So,
Right.
You see this kind of stuff, and you zoom out of just these intraday dynamics a little bit, and you're seeing the fingerprint of the options market in major ways in longer term time frames as well.
Awesome.
And Scott, as we wrap up here, I know that we have a pause this real quick. We have a code for your community that I wanted to share with people.
Awesome.
1 second, please. I'll make sure I get this right.
Yeah, because guys are asking about it too. Like, one guy wants to buy the annual, and he was just asking in the room.
Yeah, so here's the deal. If I put this in the chat, Scott 75, SCOTT 75. When you check out a Spotgamma, if you use that code, you're getting 75% off. This is our Black Friday deal. You get 75% off your first month. And then we will be messaging you with an annual offer after that, I would bet. That tends to be how this thing works.
That's great.
So if you want to try this out, you're getting 75% off of Alpha, which is the membership you need to see all of these tools. 75% off your first month is, I don't know what that is. It's pretty cheap. I think it's like $100 for the month, which is pretty dang good deal. As good as the deals we've ever had in all honesty. And then after that, you can get we'll likely, offer some sort of annual membership if you're interested in that. So SCOTT75, if you have any problems with that, email us info@spotgamma.com and we'll get you straight, make sure that you are labeled as part of Scott's community. And we're very grateful, Scott, or I'm very grateful, I should say, for being able to present with you today.
No, I'm beyond grateful for having this information. I mean, I would be, again, flying in the dark, not knowing this stuff. And, I don't claim to be an expert at all, but I'm learning more and more. And it's just the more I learn, the more I see the impact this stuff has. And thank you guys for getting this. I know this hero stuff, the feed, I know it's not cheap, and you guys are pretty much the only people that offer it. So it's incredible information to keep us traders in the game, especially the retail traders.
Yeah, well, thank you. That means so much, and I hope that the education has been valuable. I feel like that hopefully comes with it. Like a lot of people go, well, there's a lot to learn. Like, yeah, but you're learning something along with getting the data, and you're learning about the options market, gamma and delta, and all these terms. Which, like anything else, it's just a new language. It's not like it's too complicated to understand.
Right. As we head right to the levels that you're talking about too. So, no Nostradamus.
So far. Not quite there yet. I should get off the call before this thing rolls over.
Right, exactly.
Yeah. So again, thank you, Scott. I've learned a lot from you. I called it the Puccini now when there's a divergence, and then I started going, okay,
Yeah,
here's the divergence.
That's happening right now. Actually, this is you can see the flow alert if you look at the hero. Flow alert just happened, and the market kind of just spun in place, and then the hero keeps going up, and then the market just flies off the page. So
yeah, and this is we were talking about the moving average before, right? Because before it looked like it was rolling over right here, right? And I might get panicked unless I just have this moving average. Like, I'm just going to go off the moving average. How do I know when the hero trend is over? I'm just going to use the moving average. That way I'm not like, oh, you know what I'm saying? Because sometimes you get shaken out based on trying to monitor. So it's like, all right, I mean, this is obviously the best example ever. Now you got $3 billion worth of order flow in the S&P. That's a lot, as we were saying before. S&P equities is just pumping, right? This is the S&P equity indicator. It's at 2 billion. Large for that is 3 billion. So this is a lot. So, those are the pieces that all just sort of like fall into place here at the moment. And, we just updated this chart again with all the different features and functionality on here, which is great. Also, if you trade options, we just launched this options calculator. This is part of all the memberships. We think this is one of the better options calculator out there. So there's that. The scanner tool, I talked about calls and puts being expensive. That's a new feature as well. So a bunch of new stuff. We got a trace upgrade, I think, coming for December. So there's going to be a few new bells and whistles in here, Scott. And then I know you asked for a bunch of stuff. You always have excellent requests in terms of trying to predict when we might get a big trend in hero. So I'm actually actively looking at that as well. So we hear your requests. That goes for you and anybody else. Please get them in. We record all those requests, and we go through them as meticulously as possible. So
there's one here quickly. Can we get the audio alert for the main complex flow alerts? So no one's getting them recently. I know we used to get them, and now we're not getting them. Are you guys aware of that?
If you go to account preferences, alerts, you should be able to get alerts on through here. To my knowledge, they are working. I will turn them on and try them now. To my knowledge, there's no bug. If you have this enabled and you are not getting alerts, if you don't mind, email us info@spotgamma.com and let me know, but I'll turn these on now to make sure that I have them on. I turn them off because during webinars, they obviously can be distracting for people in the background. But
yeah, again, for some reason, the SPX hasn't been firing off, the S&P 500 complex, the main complex.
S&P 500 complex. Okay, yeah. I got it. I'll make sure.
Yeah, I'll tell them just to contact you if you get enough guys, then it's something.
Okay, cool. We'll check that out right away. All right. Well, thanks so much, Scott, for the time today. SCOTT 75 when you check out gets you 75% off your first month. Yeah, and then I'll be back on this afternoon. I got a couple other webinars popping up this afternoon, so if you go to youtube.com/Spotgamma, I'm doing another discussion here, I think in like about half an hour, I think. So
Awesome.
I don't know. It's crazy day
All right,
and Black Friday.
Go take a breath.
All right. Thank you, everybody. Have a great day. Good luck trading.
Thanks. I appreciate it.